Okay, so I am jumping on the bandwagon a little bit here, but I will keep it property related. In today's video, I'm going to be talking about Bitcoin and blockchain. So I'm no expert in Bitcoin or blockchain, but I think it's worth kind of talking about or discussing to see how it could impact the real estate industry either now or in the future. So first things first, Bitcoin. When I thought about actually making this video, Bitcoin was trading at 41,000 US dollars. While I was actually writing the video or kind of coming up with some of my ideas, it dropped down to 31,000. And right now, while I'm recording, it is at about 37,000 US dollars. So bearing all that in mind, it is a very volatile currency. But before we go any further, make sure you hit that like button and don't forget to subscribe. I don't actually own any Bitcoin at the moment. I did in the past. I bought back in 2018 when it was trading at around 5,000 US dollars. It did jump up to about 20,000 US dollars and then crashed back down again, and I sold out as quickly as I got in. I sold out quickly because in my mind at the time, it was pure speculation from my point as well. I didn't really know much about it, so I just decided to get out as quickly as I got in. I made a small profit, tiny profit realistically. If I had kept it until now, I'd probably have made a profit of about 60,000. But when I kind of look at that, I don't kind of cry over spilt milk in terms of any lost investments. There's lots of investments that I probably have sold out early and would have made a lot more if I just held onto them. And there's lots of other investments as well that I had thought about investing in and had really gone down the line of looking to invest in them, but decided not to in the end. And if I had gone invested in them, I would have lost my shirt. So I think I don't kind of spend too much time thinking about winners or losers, just keep going on and looking for the next investment. For those of you who don't know what Bitcoin is, there is loads of YouTube videos on it. So there is loads of videos out there for you to learn more about Bitcoin from people who know more about it than I do. A friend of mine actually put out a video the other day, Garrett Flower. So I will link his video somewhere around and you can have a view of his video. It kind of probably goes into a bit more detail than this video will on actual Bitcoin. But quickly on Bitcoin, it was created in 2009. It is limited to, I think it's 21 million Bitcoins that are out there, but you have to go find these Bitcoins and they have to be mined. They're mined using computer power, and it takes a considerable amount of time to actually find these and mine them, but once they're found, they can be then traded. A lot of investors believe, due to the scarcity of the Bitcoins and the fact that they're limited to 21 million of them, they will always go up in value. However, there's other people out there that believe that the protocols around Bitcoin could change as well, and there could be way more than 21 million at the end of the day. So I'm no expert in this area, as I've said, and there are plenty of other people way smarter than me that have a huge amount of confidence in Bitcoin. For me, I just don't see the worth in it. I don't see why it should be so valuable, or where the worth or where the value is coming from, and hence I've said worth there. So that's a personal view to me in terms of its worth. There are two ways to hold a Bitcoin. One is through an exchange like Coinbase. The other way is to buy a Bitcoin and download it onto a secure fob, and that fob would be password protected. One of the main kind of arguments for Bitcoin is how secure it is in terms of its ownership. But I would question that, and I'd question that for a number of different reasons. But one is that there's estimated to be 140 billion worth of Bitcoin that's either been lost or has been misplaced because the owners can no longer access their Bitcoin because they've lost their passwords. And there's also a number of stories where people who have run or set up exchanges have disappeared with a huge amount of Bitcoin. There's one story where someone ran off or disappeared with the estimated value of 300 million in US dollars. So in terms of how secure they are, I would question that because perhaps they're too secure. So just let's look at it this way. When someone passes away, their assets, their property, their cash, their shares, etc. can be found and sourced and easily divided between their surviving family members. But when it comes to Bitcoin, that becomes a lot harder. Unless they've actually included their passwords and where their key fob would be for their Bitcoin, that value of Bitcoin could be lost to the family, and they may never even, one, know about it, or two, ever be able to access it. Some of the exchanges are now kind of looking at these scenarios and providing kind of ways around this, but it definitely is a problem, and it could be a problem for the future, especially if people do not know that other family members have large stores of Bitcoin. I did read one story where one family lost out on an estimated 140 million US dollars because they couldn't access a deceased member's Bitcoin. I do believe digital currency is definitely going to be part of our future, and it is probably the way our future cash and future funds will go, but I'm not quite sure it's going to be Bitcoin. Anyone who works in banking or real estate or in high value goods knows there's a huge amount of regulations out there in regards to money laundering, and proof of funds, or where those funds have come from, are required in most large transactions. With Bitcoin, that could become a bit of an issue. There are lots of checks that actually take place when you are purchasing a property in terms of proving where funds have come from. And I kind of can see if Bitcoin was used to purchase a property, a lot of questions could be raised. The European Central Bank in October of 2020 announced that they are working on a digital currency, a digital euro. And I can see that being very much part of our future in Europe. And I can see Bitcoin will still have its place, or coins like Bitcoin will still have its place, because there will be people who won't want all their transactions tracked by central banks, etc. So therefore, there will still be a need for Bitcoin. But in terms of overall transactions, they will probably be more in line with actual digital currencies that are tied to banks like the European Central Bank. So I am no expert on this field, and as I said, there is lots of other videos out there on Bitcoin, so if it is a topic you are interested, it's pretty easy to find lots of information on. But I will talk a little bit more about Bitcoin and property now. So there has been a few properties that have sold or transacted through Bitcoin, and there was a buzz around it about 2 or 3 years ago. I think there was a UK agency or platform, property platform, and a Australian platform that announced back about 2-3 years ago that they would be accepting Bitcoin as part of legal tender when bidding for properties. But that hype quickly disappeared, and only a handful of properties have actually transacted using Bitcoin. You can find loads of articles about Bitcoin and buying property via Bitcoin, but most of those articles are actually dated from 2017 and 2018, and there's very few recent articles about buying property through Bitcoin. Even if you do get over the money laundering issues that most countries will have, in my mind, one of the biggest issues that you will face with using Bitcoin for buying an asset like property is how volatile the currency actually is. From agreeing on the price of a property to actually completing the sale can take a number of months, and that doesn't lend itself too well to huge currency fluctuations if you're buying in a different currency. In most cases, if an international investor is buying a property in a different currency, they will take out an option when they agree the price to make sure any currency movement, i.e. between a dollar or euro or whatever currency they're trading in, doesn't actually impact the sale of that property or the purchase price of that property. I.e. if there was a 1 or 2% movement in the purchase or in the actual currency prices, that doesn't have an impact on the purchase price because they bought an option at a certain date that protects them for any future currency movement. That option is probably not available for Bitcoin at the moment, and the currency can go up and down as much as 50% over a few months. And I've seen that the currency dropped by more than 20% in one day a few days ago. Imagine you were sale agreed, contracts were signed, and you were completing a sale on that date. The transfer is made in Bitcoin in the morning to your solicitor's office. The solicitor verifies it, checks it, makes sure it's come in, and then transfers it to your account later that day. That could be a number of hours before that happens. Even if you're lucky, it's a number of hours. If a price fluctuates as much as 20%, you could lose a huge amount of the value of your property in one day. And I'm not sure banks or lenders or anyone like that would allow you actually trade or lock in a property price based on a Bitcoin. In my mind, there are way too many holes or risks within the concept of buying property through Bitcoin at the moment. So what about using blockchain within the real estate market? Well, I've been reading about blockchain since 2012, and I've yet to see it really impact the property market or the real estate market in any great way. Blockchain was created in 1991, and the main use for it right now is Bitcoin. There are a lot of people out there that believe blockchain will make it far easier for you to buy and sell real estate. Even people like Gary Vee have come out with statements saying that in the future, in the next 10 years or so, we'll be able to just quickly sell and buy property in a matter of a blink of an eye.
It's basically you and I, you will sell me your home in 11 years and our transaction will happen on the blockchain. Nobody else, which means all those fees in between you and me.
A lot of people believe that blockchain will actually cut out the middlemen, i.e. it will cut out the likes of agents, solicitors and surveyors, and make the whole process cheaper. But what I can really see happening is that it just adds expensive tech to the process and actually makes the process more costly. Basically, the idea is that all the property information can be stored on a block and on a blockchain, and that can include the owner's details. And if the owner wishes to sell that block or blockchain, they can immediately sell it to the new owner, and the new owner's details will be recorded on that blockchain, and then they will now own the property and all the information included within that blockchain. In principle, that sounds great, but in practice, that is not what's really going to happen. Firstly, you'd have to have all properties registered on the land registry, registered digitally. You'd also have to have all properties, including all the details within that property, digitalized, and each property would have to be digitalized and included on the blockchain for this to happen. But you still need agents. You still need agents to go out and market the property, find buyers, arrange viewings, and also put a value on that property. You need solicitors to quickly check that the title is still all in order and everything that is on the blockchain is reliable, even though the whole idea of blockchain is that everything should be secure, and once it's there, it should never be corrupted. But that said, I can't imagine banks or lenders being willing to lend huge volumes of money on property without someone checking the actual legal details actually stand up. But my main issue with this whole theory is you're actually buying a physical asset. You're not buying a digital asset. And what I mean by that is the physical asset is far more important than the digital asset or whatever information is stored on the blockchain. And you'd have to wonder, will the blockchain stay up to date with the actual physical asset? Like if there is refurbishments made or alterations made, will the owner update the blockchain to reflect that? If they make an extension, etc., or if they make changes, or even will the blockchain record data like there's a leak or there was damage or there was major issues with the property? I don't think so. So therefore, the information within the blockchain is only realistically probably going to be the ownership rights and title rights, but the physical property will still need to be inspected, and you'll still need a surveyor to carry out that inspection. And I also have to consider what happens if the property is tenanted, either from a commercial point of view or from a residential point of view. I would assume that any rent roll or any rent collection data will be included within the blockchain long term, perhaps not right now, but long term, if that's the way it was to go, it would still be included. But the blockchain or the information on the blockchain is still not going to be able to tell you, is that tenant going to move out soon, or what are the likelihood of that tenant remaining in business. So I don't think that data is going to be within the blockchain, and still you're going to need agents and valuers to go in and make sure that the asset you are buying is correctly valued, and I don't think the blockchain is going to tell you that. A lot of the articles that I have read on blockchain over the years since 2012 have been from tech experts, and fair enough, that's who probably know the most about blockchain. But they have zero experience working in the real estate industry, and they believe they can solve a problem that they have no experience actually dealing with, or no understanding of actually how it really works. Buying real estate is complicated. In most cases, it's probably one of the biggest investments most individuals will ever make in their life. You need a good agent to tell you you are paying the right price for it or getting the right price for it. You need a good solicitor to advise you on your legals to make sure you can sell it in the future. And you will need a good surveyor to make sure there's no structural issues with the property. Blockchain may speed up the process a little bit, but I don't think it's going to eliminate these tasks within the overall transaction. Lenders will still require a solicitor or a lawyer to review the legal documents that are there to make sure that they are lending on a secure asset. I don't think they'll be relying on just the information that's there within a blockchain. I think Gary Vee is wrong in his assumption that we'll be just easily able to trade properties within a matter of minutes. Some properties have used Bitcoin to sell to investors, but there is only a handful of examples of this. And a lot of the time, they're selling just a Bitcoin that it represents a share of a building to these investors. They're not selling them an individual floor, an individual unit. They're not selling them an actual area within a building either. All they're getting is a percentage of the overall building, and that gives them an entitlement to a percentage of the rent long term as well. But the owner of this blockchain who has bought a percentage of this building can't walk into this building and claim that they own a certain part of it or a certain area of it. All they do have is a share of the overall building. They may as well have just bought a share of a company. In my mind, this is a bit of a scam. The original developers would have built it and then sold it off for a profit via these blockchain models. Small investors bought small individual blocks and they claim that they have a small ownership of that property. But what happens when they want to sell out their share of that property? There's no direct marketplace for them to do it. Sometimes the original owners could have some buyback options, but not always. So there could be an issue for them to sell or release the equity or release the funds that they've actually put into this blockchain. And therefore, they may struggle to actually sell it. And even if the property price, i.e. the physical value of the asset that they bought into increases, there may not be any mechanism for them to actually realize that value because there may be no market for the blockchain that they've bought. In summary, I don't really understand Bitcoin, so do not take any of my advice on it. But realistically, I don't see where the worth or where the value is coming from other than speculation. In terms of tech and blockchain, definitely may have some sort of an impact on the real estate market, but I don't think it's as big as some people think. I think there will always be a need for agents and there will always be a need for some legal people involved as well as surveyors. I have been reading about blockchain for nearly 9 years and I'm still to see any real impact on the real estate market. Prop tech companies founded by individuals who perhaps had an issue buying their first home, thought there was a problem there and they wanted to resolve that problem and they thought they'd resolve that problem via tech, will not survive or will not be profitable unless they actually involve the main stakeholders within the real estate industry. If you've enjoyed this video, make sure you give it a thumbs up and hit that subscribe button. I probably won't be doing any more videos on Bitcoin, but perhaps I might do some videos on prop tech. So if you have any questions on prop tech, or even if you want to share your view on Bitcoin and the future of Bitcoin and how it will impact the real estate industry, please let me know. Put it in your comments below. But as always, I want to say thanks for watching and make sure you give it a thumbs up.